Good morning, everybody. Shane here from the Brookings Home Team, powered by Century 21, 8:15. Right there on the dot. Got Mark Waterman here from Great Western Bank. We're going to talk a little bit, get a mortgage tip in here this morning. But before we do that, please remember, as you jump on here, let us know. Give us a heart, a thumbs up. If you have any questions, let us know that too. I'll have Mark's information on the top, on the bottom, or on the sides, wherever your device allows you to see that. And feel free to reach out to him at any time, and myself as well. So with that being said, Monday morning, Mark, what do you got?
Yeah, appreciate it. Monday morning mortgage tip, I wanted to talk about home equity line of credit, or better known as a HELOC. So either during the home buying process or anytime after the home buying process, you could be interested in getting a home equity line of credit. If you're getting it during the initial home buying process, we do have to take it into consideration for your debt to income to make sure that you can qualify for it. But it can be a great tool if you're putting money down. Majority of home equity line of credits, you can go up to 90% of the appraised value. And I guess the advantageous thing about it is that it's money that you're already getting qualified for, and it's majority of banks it's a 5-year product. Here at Great Western, we do have a 10-year HELOC option, and I guess the pros to that is that you don't have to rewrite it as often. But basically, it's money that you can use to make improvements to the home. Most of the time when you buy a house, there's always a couple things that maybe weren't exactly how you wanted it. So if you want to make those changes, you could use those dollars to do so. It's a heck of a lot cheaper than putting it, on a 20% interest credit card or something, something along those lines. So I guess it's using, it operates like a credit card, but it's just backed by your house at a much lower interest rate. I think, majority of the home equities are in that 5 to 6% range, and then there's variable and fixed options as well. But it's kind of just using your own money. It's using the equity in your home to potentially do other things with it, or just have it for emergency purposes. So if you get it immediately after you buy the house, very, very few fees, since you already have an appraisal from the first mortgage that you just got. You just got the appraisal from when you bought the house, so you can use that. I guess I always have the conversation with my customers, as when we close, just to keep their options open, because of the fact that it's a 5 or 10-year product. You never know. So for emergency purposes, it can be a good thing too.
And one of the things I don't think you mentioned too is sometimes that interest is tax deductible for you too. So
correct.
You can combine your credit cards and pay those off that way. Go from a 20% interest rate to a 5%, and possibly have a tax reduction.
Absolutely.
Or a tax reduction on there too. Buy a car. So I had one and loved it. It was a revolving credit line, and you could put some big ticket items on there and be able to write them off. So possibly talk to your tax advisor,
tax person for sure.
We're not accountants.
Correct.
So all right, and you said Great Western has
so we have a 10-year, a 10-year product. Typically, majority of banks have 5-year products, but again, that's one of the advantages to getting it at the same time. You're already getting the appraisal, for buying the house. It's a cheap time to at least obtain that credit. It doesn't cost you anything until you advance those funds. So if you have a $20,000 home equity line of credit and you advance $5,000, you're only getting charged interest on that $5,000. So just like a credit card.
Great stuff. All right. Like I said, if you have any questions for Mark, let him know. Reach out to him there via the phone, email, or stop in here at Great Western. Thank you for watching. That is this week's Monday morning mortgage tip. We didn't have too many in the month of October. A lot of traveling and stuff, I think, going on, so only a couple of those, but hopefully we're back to it here. I think there is one Monday in November that we will not be doing it, but and actually that might be next Monday now that I think about it. I'm not sure. Anyway, we'll be back as soon as we
like
can.
Veterans Day.
Yeah,
maybe, or-
yeah, another holiday on that Monday, but we're getting ready for Thanksgiving and Christmas, guys. We got some exciting stuff coming up here at the Brookings Home Team, so keep your eyes open. Thanks again for watching. Have a great week. We'll talk to you later.
Thank you.